To come back. Joining us to discuss that, Ashishkumar Chauhan, MD and CEO of the Bombay Stock Exchange. Ashish, thank you for joining us on Bloomberg. Take me through some of your initial comments on what you made of SEBI's moves yesterday. Do you think this is going to bring momentum back, or at least get the investors back into the primary markets?
It should. See, basically, the way we look at it is when the secondary markets are doing well, usually primary markets also start becoming live. And of course, there is a lag effect because some of the issuers who want to come out with public issues will take a reasonably long time because they have to complete the process of writing the DRHP and get it approved and so on and so forth. But effectively, it's a good beginning, I guess.
What's your assessment of the sentiment in the markets right now? Are you seeing any early signs of the IPO market reviving?
We have seen reasonable action in SME market over last couple of months. Already 60 companies are listed in last 2 years and 15 more will be listed in next 2 months. So there is a reasonable traction there. And in terms of the main board, already Wonderla Holidays was the last issue, I think. And it did really well. And so it gave some comfort. Of course, it was before the new government came into power. So there has been what I call a lot of secondary market investment happening by the retail investors. The delivery volumes have shot up almost they have almost doubled in last 2 months. So effectively, there is a lot of retail interest which augurs well for the primary market.
Right.
And we think if this continues, because almost 5-6 years, the entire market was not doing so well, secondary as well as primary.
Right.
And now that the secondary market has started doing well, effectively the primary market also will come into life, provided people who have already filed their DRHPs with SEBI and got them approved. It's like having a shelf prospectus available.
Sure.
Those guys would be the first to come in, and then the other guys who are now preparing would start coming in. So it's a matter of time because the economic activity is picking up slowly, and the sentiment is now coming back.
Ashish, the SEBI has also talked about PSUs having a 25% public float in a matter of 3 years. There are, I'm told, 36, 37 companies. Do you see government-owned companies taking the OFS route to dilute very soon? What's your reading of this?
See, basically it would also depend a lot on what is the strategy of the new government in fiscal deficit and what kind of revenues they expect in this quarter as well as next quarter in terms of the fiscal and revenue deficits and all. But effectively, the way we look at it is the offer for sale mechanism has been found to be extremely useful in doing this disinvestment, either for government companies or even private companies, where the private participants also or entrepreneurs have reduced their stake from more than 75% to bring it down to what is sort of allowable to up to 75%. And so we think at literally few days notice, all these things can be done, and the framework has been tested for more than 120, 130 times.
Sure.
And it has been found to be reasonably useful. So I don't see too much of an issue in operational areas. More it would be strategic and tactical from the part of the government saying what they want to do. And once they decide that if they want to go on the OFS route, it would be extremely easy for them to go ahead and do it on exchanges.
Right. One final question, Ashish. As a result of all these measures that we've seen so far, are you expecting retail money to come back? No,
absolutely. The retail investor seems to have come back over last couple of months, and we have seen the rally which we have seen over last couple of months is primarily due to the foreign money, but also to some extent due to the Indian investor, retail investor coming back to the market and not selling as much as he was selling earlier. And so for me, I think that once you have reached the peak which was achieved earlier a couple of years back or a few years back,
sure.
Now slowly you can see the sort of confidence coming back. On the other side, the other asset classes in the form of gold or silver or real estate have not been doing well at all.
Sure.
So effectively what we see is that the investor chases past returns, and so over last 1 year, the returns which equities markets have given is much more significantly higher than what has been given by gold or real estate, and probably both of them have been negative, if not hugely negative. And so effectively now more and more people would prefer to come to the stock exchanges to invest going forward.
Ashish, we'll leave it there. Many thanks indeed for joining us with your perspective. Ashishkumar Chauhan from the Bombay Stock Exchange. Quick check on the markets and how they trade today.